live trading room, streaming live in YouTube. Um, I want to take part of this morning's segment and take a look at the report that we published on October 8th um, with regards to the 360-day cycle. I think it's a very important report, and it's a very important um, thing to look at with regards to what the gold market is doing, as it's confirming basically that on September 28th, the expected cyclical bottom has been completed. And so the question is, where do we go from here? And we're going to take a look at the analysis that we did, and then we'll take a look in real time at gold, silver, and Bitcoin.
Equity Management Academy. October 6, 2021. Gold. Prepare for a 20% rally from the annual lows into quarter 1, 2022. Summary. This morning, the government announced that unemployment claims finally fell after a month, but 4.2 million Americans are still receiving benefits. The labor market appears to be struggling less than expected. The gold market is showing a lot of buying action. The market is ready to move up again, but it may move down to test $1,765 again. We are probably going to make the annual low over the next few weeks. Fundamentals. This morning, the government announced that unemployment claims finally fell after a month, but 4.2 million Americans are still receiving benefits. The labor market appears to be struggling more than expected. About 326,000 people filed for unemployment benefits this week, down about 38,000 from the previous week. Economists expected about 345,000 claims. About twice as many Americans remain on unemployment benefits compared to before the pandemic. Gold. The CEO of the Equity Management Academy, Patrick MontesDeOca, said this news led to a bit of a sell-off in precious metals. Gold came down to almost the daily buy one level of $1,751, but then it reverted, activating a bullish price momentum. According to the artificial intelligence embodied in the Variable Changing Price Momentum Indicator, VCPMI, the target is $1,771. The market is showing a lot of buying action. The market reversion back up means that, MontesDeOca said, the market basically discounted the fundamental news. He argued that raising interest rates will be bullish for precious metals. Raising rates is bearish for most instruments that are leveraged, but there will be less of that type of buying as rates rise, since there will be less borrowing and less leveraging in various markets. Precious metals have been in an inverted market since last year, he said. Gold hit $2,089, discounting the damage that the pandemic had caused. The market then declined back down to test the levels of support around $1,680. The 61.8% Fibonacci golden ratio retracement. Then it reverted back up again. The market is matching the Fibonacci wave model. We are in the beginning of a third wave. The market is ready to move up again, but it may move down to test $1,765 again. However, the VCPMI predicts that the market is far more likely to go up again. When gold came down to the weekly average of $1,733, it found a lot of buyers. It is also an area of support based on the daily data. For the monthly gold report, with gold closing below $1,785, the trend momentum was bearish. A close above $1,785 will negate this bearish momentum to neutral. The monthly price momentum of $1,772 was also bearish. A close above $1,772 stop will negate this bearishness to neutral. On the downside, the monthly targets are the buy levels of $1,707 and $1,756 for the rest of the month. If we trade through $1,772, we have targets of the sell levels of $1,823 and $1,888. For the weekly gold report, the weekly trend momentum of $1,783 is bearish, while the weekly price momentum of $1,749 is bullish. So we had a bullish price momentum within the larger bearish trend last week. So $1,777 and $1,793 are the weekly targets for this week, which is where you want to lock in your profits. The fact that the market reverted based on the economic news that came out, MontesDeOca said, is just icing on the case on top of the technical indicators. The fundamentals appear to be moving toward aligning with the technicals as we move into the third and fourth quarter of this year. We are probably going to make the annual low over the next few weeks. Any opportunity when the market comes down, add to your positions. We are about to complete a cycle and start a new 360-day cycle with great promise. The VCPMI is looking for a 20% to 25% rally over the next 2 quarters. Bitcoin. Bitcoin is at 55,160. On October 1st, we recommended to go long from the buy 1 level of 43,325, which is the first level of support using conventional technical analysis. This was an area where the VCPMI says you want to buy and go long. The market then came back up and reached the weekly sell levels, which were the targets of 51,245 and 53,009.
I wanted to go over the report to take a look at pretty much, although the information is outdated, that we want to see what the analysis of the variable changing price momentum indicator told us at the time. And basically, if you take a look at the left of the chart, the monthly average is 1772, and we have been trading above that average price, and the AI told us that if we get above the monthly average price of 1772, which we did aggressively here on October the 13th, the price momentum is going to turn bullish. So we're beginning to see, even though using the 9-month moving average, which is 1785, that is the bigger trend. That is the bigger trend. And the variable price momentum indicator is basically the price momentum within that trend, within that bigger trend. And what you see here is basically we're beginning to see a lot of buyers come into the market. And you can see the buyers pretty much, even going back to early in the year in March, this was recommended to be an area of support, an area of accumulation of supply. So we're beginning to see the market reverting, as indicated, as of the September 28 expected low to take place, which actually came in on the 29th. And the report that we've been recommending, based on our analysis months ago, was pointing out the beginning of the next calendar year that we use, which was September 28, 2021 to September 28, 2022. And what you see above, if we take a look at the sell one level on the monthly, is 1823. So the monthly AI is in a bullish price momentum with a target of 1823. Right above it, it's 1840, which is the 360-day moving average. And even though the 360-day moving average is in a bearish momentum, we're beginning to see the shorter end of the market from the monthly. And if we take a look at the weekly data, at the daily data, we're beginning to see the daily and the weekly now also beginning to give us an indication that the price momentum is turning bullish. Within that bearish trend, basically that a close above 1785 would be negated. And we're not that far off from there, so we're beginning to see, again, if we take a closer look, the bottom came in on the 29th, and from the 29th, which was the weekly, turned out the weekly area of accumulation of supply, the buying area at 1721. This whole area, when we revisit the data, continues to tell us that it is an accumulation of supply, meaning that this is where you want to build a position. Accumulate supply. When the price gets up to the extreme above those levels, as it did here on October the 14th, and we got up to 1802, it gave you enough information in even using the weekly and the dailies that we update constantly, and we published in Seeking Alpha in our private membership marketplace, where we provide explicit directional signals using this incredible intelligence. And what you see here is the market telling us that this is now an area of distribution of supply. This is where sellers can come into the market. It validated, confirmed by closing below the pivot point and the target below of average daily and weekly was completed. It came into, again, a blue level that tells you accumulate using the daily signals. It's beginning to give you buy signals, even though the yearly average at 1840 is still in a bearish price momentum. But in order for me to see when the market is shifting, even though we get this information, particularly on the bigger picture, and it's bearish, in the yearly average is indicating the possibility that the market may come down to 1572 in using that information. But it doesn't necessarily mean that the market has to come down. So what I use is the daily, weekly, and monthly data, the AI that tells me pretty much where the market is, short-term, intermediate, and long-term, in relation to that bigger trend. And what we see here is that on the, again, 28, the seasonal low as expected came in. And when the market came in here, it pretty much anticipated the extreme above the mean to be at the levels above 1800, 1823. And here the weekly is all the way up to 1825. As you can see, these are the red levels, and this indicates that this is where you can manage your supply, your inventory, according to your profile. For those individuals that are asking me, basically, what does the VCPMI is, basically. It's a probability model that includes pivot points, includes wave counts, vortex mathematics, WDGAN, and wave counts. It's not one-dimensional in that we incorporate all the indicators into a filter that provides for us a very specific Fibonacci perfect structure. And we don't use more than 5 pivot points. And within those 5 pivot points, we identify the average price. And mathematically, we calculate the extreme levels above as to the maximum move in terms of the volatility within those pivot points. That's why it doesn't use more than 5 pivot points. Within those 5 pivot points, obviously, we incorporate the probability models that transform the pivot points into colors. The green color is the average, the red color is the extreme levels above, the blue colors at the extreme levels below. And that's where you buy. And we use the reversion to the mean principle, basically, that is indicating to us, it shows us that the extremities of speculation by trading below the extreme, below the mean, in this case, it was on September 29th. It came in right into the cycle low that we expected. It reverted right back up to the extreme above the mean. And this is what we call mean reversion trading. And this is what we teach to all of our traders in Discord, in our private trading room. And I also publish a great deal of information in Seeking Alpha. And of course, we provide a private service in Marketplace. So I do share quite a bit of information, free information, intelligence that you as a self-directed individual can use according to your profile, according to the inventory that you trade, whether it's futures, whether it's stocks, whether it's options, or a combination of all of them. I particularly use all of them, depending upon the condition of the market. Particularly when you get to levels that are indicating, again, an extreme oversold condition. So this simple format gives you a great deal of data, information that we use. And in addition to this information, I also look into comparing, you might say, what the algorithm is doing in relation to Bollinger Bands or some of the most conventional technical indicators. What you see here on this chart that looks pretty busy is a combination of Fibonacci trend lines. We use the pivot points as the probability models, and within those pivot points, the AI identifies the mathematical extreme levels again. And what we do is simply verify and confirm where those levels are in relation to conventional technical analysis. And here you can see the market has built this uptrend nicely, and we have seen the market try to break this uptrend trend line, support line, and that essentially reverted the market right back up after the seasonal low came in. So where are we going from now? Well, we've traded above the daily level of support. We are trading above the daily average for today, which is 1780. And we are trading above the weekly average price of 1773. What we have above here, to get a little closer look at this, is the sell one level of 1793 and daily 1802. So for today, we have the targets in place for the daily. So the AI is telling us that the market, by trading above the daily and the weekly average, is in a bullish price momentum within that bigger trend that we look at the annual, which is at 1840 and the average annually in that bearish trend. 1785 will neutralize the monthly average. So as well, and so we're getting the market to neutralize the downtrend and begin to activate a bullish price momentum within a bigger bearish trend. So you can see the curve, you might say, aligning itself with the direction of the market, indicating the seasonal low is in place. As we move into the next few weeks here, what we want to see basically is the market come back up here and test these levels of 1793, 97, 1802, and all the way up to the weekly 1825, which is the remainder, the target for the remainder of this week. Let's take a look at silver. I spent a lot of time in the gold market because it is the leading indicator. To me, it's the leading indicator not only as an economic indicator, but also it's real money. And I feel much, much safer, to be honest with you, with regards to my money, or at least a percentage of my portfolio into gold and physical assets. And I use any correction in the market, particularly in the silver market, to accumulate silver, physical silver. And I do it systematically. And so what we see here pretty much is the same movement in silver market, in that it made a bottom under 29. It came right into the area of accumulation of supply. It was recommended, and then from when it gave a signal here of a reversion to the mean, it automatically activated the targets of the average price for the weekly, which was 2311, and the extreme level above the means, which we are beginning to complete. 2443 was completed this morning, and this was the weekly target that's completed. The daily targets are at 2470 to 2506. What you also see here in silver is that the price came right into the Fibonacci trend line, which matches the sell to level weekly. And this represents levels of resistance. And what the market needs to do is basically go through this, close above, and ideally go into the 360-day buy one level, which is 25.85. And potentially the market can get up all the way up to 26.72. But the levels that you see here in red are levels of resistance. And what we want to see is the relationship of price at these levels in terms of buyers and sellers. If we get enough buyers, more buyers, as you can see here, then the selling pressure, the supply that came in here, then it will clear this resistance level, and this level will become the support for the next fractal higher in price that I believe could take silver all the way up to $26, $27 over the next few weeks. The Bitcoin market made a new high of $67,680 as of yesterday. And we recommended our traders to lighten up a little bit if you've been long on Bitcoin or digital currencies, to lock in some profits. As you can see, the algorithm indicated that this area again is in red, using the same methodology, which identifies the distribution of supply. And the targets were completed daily. The sell one weekly target was completed. And this is where the sellers came in. The market did not have the strength to get up to the sell to level of 69,513, and now it's reverting, and it's reverting what appears to be into a key reversal down day. And that means potentially now that we're going to be looking to test the average weekly for the rest of the week of 60,358, and if we close below this level, can come down to 57,192, at which point we'll take a look and see what the market is doing at these levels, and what indication do we have from here. So I've gone through thoroughly here today and hopefully try to explain to you, my viewers here for self-directed individuals, in how I'm applying and how I'm interpreting basically this AI. It's a great opportunity to share this information with you for those traders that are serious about being successful in trading in these markets. Thank you again for the opportunity to share this with you, my friends, and continue to have a great trading week. Be safe. I'll talk to you next time. Take care.